Two people walk into the same bank. One gets coffee, a sofa, a relationship manager waiting by name. The other takes a queue number and waits 40 minutes just to replace a debit card. Same bank, same logo, completely different experience. So what is actually going on? Today, I want to explain three things. First, the hidden banking tiers that quietly decide how you are treated. Second, why banks actually do this. Hint, it is not really about you. And third, why the same logic now shapes airlines, luxury brands, and almost every modern system around you. Because modern life quietly runs on one thing now: low friction for valuable customers. Most people think a bank is one service with one experience. That is not true. Modern banks quietly operate multiple banks inside the same logo. And the gate is usually your deposits. The exact numbers vary. Different countries, different banks. But the pattern is surprisingly consistent. Tier 1, around 50,000 to 100,000 US dollars. This is usually called Premier, Priority, Preferred. Gold. At this level, the experience changes slightly. You stop paying certain fees. You get a dedicated hotline. Sometimes airport lounge access. Sometimes a relationship officer who actually replies. Small things. But they reduce friction. Instead of, "Please wait on the line," it becomes, "Hello, Mr. Chan, I already checked your account." That difference matters more than people realize. Tier 2, around 1 million US dollars. This is private banking territory. HSBC Jade, Citigold Private Client, UBS Wealth Management, JP Morgan Private Bank. Now the experience changes a lot. You get a private banker, investment support, estate planning, tax coordination, sometimes access to deals normal clients never even see. And importantly, the bank starts solving problems before they become problems. Your card fails overseas. Someone calls you. Large transfer delayed? Someone manually pushes it through. At this level, the bank is no longer selling products. The bank is selling smoothness. Tier 3, around $10 million and above. This is ultra-high net worth territory. Family office level. At this point, the bank may build an entirely customized service model around the client. Dedicated teams, cross-border structuring, private equity access, sometimes separate offices away from the normal branch entirely. 3 thresholds, 3 different worlds, inside the same bank. So why does this exist? The honest answer is not very romantic. Banks do not really care about customers equally. Banks care about stable deposits. That is the core business model. Money comes in through deposits. Money goes out through loans, mortgages, corporate lending, credit facilities. The spread between the two is where banks make money. But here's the important part. The deposits need to stay. If customers move money constantly, the bank cannot safely fund long-term lending. That creates a funding mismatch, and funding mismatches are how banks fail. Silicon Valley Bank in 2023 is a recent example. So banks are not just looking for deposits, they are looking for sticky deposits. That word matters. Sticky means the money stays, salary account, mortgage, investments, family savings, insurance, business accounts, all inside one bank. Once that happens, the customer becomes extremely valuable. And now suddenly, the free coffee, priority hotline, and airport lounge make financial sense. Because the bank is not rewarding wealth, the bank is protecting funding. That is the real logic. In finance terms, the wealthy client is not only a customer. To banks, wealthy clients are key to a balance sheet that can survive. And this creates something most people quietly feel but rarely say out loud. Different people experience completely different levels of friction inside the same system. One person waits 3 days for a callback. Another messages their banker directly on WhatsApp. One person sits in a crowded branch holding ticket number 87. Another walks into a private room with sparkling water already prepared. Same logo, different country. And the strange part is this: the higher your value to the system, the more invisible the system becomes. Things simply work. Transfers move faster. Problems disappear faster. Humans become more available. That feeling is what wealthy customers are often really paying for, not luxury, reduced friction. There is another layer to this. Once your financial life is deeply integrated into one bank, leaving becomes painful. Your salary goes there. Your investments are there. Your mortgage is there. Your credit cards are there. Your automatic payments are there. To leave, you have to move everything. Update employers, move subscriptions, refinance loans, transfer portfolios. Banks understand this extremely well. So the better they treat you, the harder it becomes to leave. Convenience slowly becomes lock-in. And this is why banks compete so aggressively for salary accounts. Because once your salary lands there, everything else usually follows. And this logic does not stop at banking. Airlines work the same way. Frequent flyers get lounges, priority boarding, dedicated check-in. Why? Because those travelers generate high-margin revenue and stay loyal. The free champagne is not generosity. It is retention spending. Luxury brands do this too. Hermes does not simply sell a Birkin bag to whoever walks in. You build a relationship first. Purchase history matters. Store loyalty matters. The bag is not the real product. The relationship is. Even Apple works this way. The customer with an iPhone, MacBook, AirPods, Apple Watch, iCloud, and Apple Pay gets the smoothest experience and also becomes the hardest customer to lose. Different industries, same system design, low friction for high-value customers, higher friction for everyone else. So, is this fair? That is a different discussion, but economically, it is very rational because the modern economy is increasingly built around access to faster service, access to human attention, access to convenience, access to lower friction. And in a world where everyone is busy, tired, and overwhelmed, low friction quietly became a luxury good. That is what modern premium systems are really selling. Not status, not gold cards, not marble floors. They are selling less exhaustion. Low friction is the new luxury good, and the people who receive it are usually the people the system already profits from most. One quick aside, this is my personal take. If you see things differently, trust your own view. I am here to share a perspective, not a verdict. I am curious, what is the clearest example you have seen of two completely different experiences inside the same company? A bank, an airline, a luxury brand, a tech platform? Let me know in the comments. Thanks for watching. I will see you in the next one.